Hi everyone, and this playlist past two videos regulating one topic based on input tax credit determinations, follow-ups, and key components, and also purposes and exemptions of goods in supplies based on input tax credits. Also, we discussed, and on this slide, I am going to present about the overview of input tax credit and final regulation of at present 2025. This is the main implementation of input tax credit in current year, and we have the three components of this regulations overview. The first overview is qualifying energy properties and the broad scope of inclusions and independency of definitions and biogas methane's contents. Here classifies which energy properties and components are eligible. It is a qualifying energy property of this first regulation in 2025, and one of the regulation also covers energy generation, storage, biogases, and interconnections equipments is a broad scope inclusions of the final regulation in 2025, and then defines functionally interdependent and integral parts for a project component, and it is also interdependency definition final regulation of 2025. Then update the measurement print for a biogas methane content as a biogas methane content based on the input tax credit final regulation in 2025. This four elements is one of the regulation of 2025 in input tax credit. We have more and more regulations for every year, and next the thermal energy storage property is most exemptions in this input tax credit. Also, this definition of a property designed to the store internal energy for a subsequent use is a main energy property for storages, and exclusions of this thermal energy property is excludes equipments the covers other energy forms, for example electricity, into heat entirely, and primary focus of this properties is concentrations on the altering the timing of heart use rather than its generation. This is the primary focuses of this thermal energy storage properties. Now, how ITC versus PTC tax credit involving a structure, timing, and incentives doing in current 2020 year structure of this. And investment tax credit is one of the tax collecting method in India, and also production tax credit is one of the tax collecting method in India also. We going to differentiate between investment tax credit and production tax credit. We have the three element differentiations of this investment and production tax credit. Here the investment tax credit is a main structure playing in one-time credit based on a percentage of capital investment, and then production tax credit structure is a ongoing credit based on electricity produced for per kilowatt per hour. Then the timing is calculating the investment tax credit is received upfront when the project is placed in services, and the production tax credit timing is receiving annually over a period, typically 10 years, as the energy is generated. Then investment tax credit rate is scheduled to step down after 2032, impacting a future product economics. This is the rate level of investment, and production tax credit investing capacities encourage consistent high volume energy productions. This is the main three differentiations between investment tax credit and production tax credit. And now I am overviewing my video, and input tax credit and section 11 in supplies and production tax credit, that structures, purposes, definitions, we all about discussed about this playlist. and this video deliver about the one of the topic in indirect tax, input tax credit from indirect taxes, and I'll see you on my next video in more related topics in indirect tax. Thank you.